Good afternoon, everyone. It looks like we still have a couple more people joining, so we'll get started here in just a minute. Hey everyone, thanks for joining us for our fourth month of our Beginning Farmer and Rancher webinar series. This is a joint effort between the Farm Service Agency, which I'm a part of, Natural Resource Conservation Service, Rural Development, and the Risk Management Agency. This is our fourth month. Our topic is Rural Development's financial programs. So within this month, we're going to start with a couple welcome and introductions, and then Rural Development is going to give their presentation. You can see the topics are going to go through their value added producer grants and Rural Energy for America program, and a couple other great items. And then we'll have a chance for you all to ask questions about rural development. And then we'll go over all of our future program deadlines and important dates for the rest of the series for this year. And then we'll go over some, like I said, webinar dates, contacts, and any questions you all might have. A quick note, this is being recorded and there is a transcript being transcribed. So if you don't want your voice or anything like that shown, please take note of that it is being recorded. We are going to post it on FSA's website with the PowerPoint presentation. And then NRCS's YouTube channel will also put the recording if you want to look back at it later. I do have links for those at the end of the presentation so that you can see those towards the end. Let's go ahead and get started with just a couple introductions. My name is Liz Thomas. I am with the Farm Service Agency. I'm actually the Outreach and Communications Coordinator, and I am located at the Colorado State Office. Cindy?
Yes, sorry about that. I couldn't get unmuted. Hello, I'm Cindy Einspar. I'm with the Natural Resources Conservation Service. I am the Outreach Coordinator and the Beginning Farmer and Rancher Coordinator for the state. And I'm glad to see you all here. I'm excited to hear about rural development's programs personally myself and how it fits into Colorado. So what an exciting presentation today.
Hi, everyone. I am Amy Munden. I am the Public Information Officer here for Rural Development in Colorado. I am so happy to be joined today by Robert McElroy. He's my Business Programs Director. So Robert, if you want to say hello.
Sure. Thanks, Amy. Hi, everyone. Robert McElroy. Glad to be here today to present some information on rural development funding opportunities.
Thanks, Amy and Robert. I'm not sure if Jeff Darrow is on with us, but he is our RMA contact. If he's on, I'll give him a chance to introduce himself. If not, we do have some contact information at the end if anyone has questions on RMA as well. Okay, I don't think he's on, so we're going to go ahead and move forward, and I'll let you take it away, Robert.
Thank you, Elizabeth, and thank you again to everyone for having me here today. I kept the introduction pretty short because I can tend to run on a little bit, so I'll watch the time here. It shouldn't be a very long presentation, but with over, I think it's 70-something programs and loans and grants between our different divisions within rural development, I'll just be touching on the tip of the iceberg and focusing on our business and economic development programs. But as this first slide indicates, we actually can provide assistance through economic development in these three main areas, and our cliche is usually we can help build or maintain a community or small town from the ground up. And that includes housing, both single-family housing, multifamily housing, as well as self-help housing projects. And this is all geared towards providing affordable housing opportunities, which are critical here in Colorado and throughout the nation. We also provide community infrastructure through our programs that provide loans and grants for police stations, firehouses, schools, typically K through 12, water, wastewater projects, just about any essential community facility you can think of. And then, of course, there is our business and economic development team, and that's the one I head up. We have a staff of about 8 folks now, including myself. I work here out of the Lakewood office, which is the Denver Federal Center, and our state office. And we host a number of programs, and that's what I'll focus on today. So, Elizabeth, if you don't mind the next slide. Thank you. So what I'd like to start with is just kind of a general overview. This is just a smattering of some of our business and cooperative programs. As I mentioned, 70-something programs between those 3 divisions, 20 plus just in business programs. So a lot of creative and innovative ways to find financing and funding for your small rural business. The ones I want to focus on today are our Business and Industry Guaranteed Loan Program, our Intermediary Relending Program, our Rural Business Development Grant, Rural Economic Development Loan and Grant, our Value-Added Agricultural Producer Grant, as well as our Rural Energy for America program. Before I dive into these, a couple of these in greater detail, I'm just going to touch on a couple with a broader view. Our Intermediary Relending Program is sort of the cornerstone of all of our relending opportunities. We typically partner with nonprofit and public partners in order to provide access to low-cost financing options. Basically think of this as micro lending. We'll work with a nonprofit partner to provide a low-interest loan that they can then in turn provide a low-interest loan to a small business in a rural community. With IRP, for example, our term is usually 1% on our rate is usually 1% on a 30-year term. Now, that is kind of the top tier of our relending. A lot of our relending can start with a grant under the Rural Business Development Grant, the RBDG program. And it basically includes that spectrum of relending options, from grants to a 1% loan. We can provide that capital access through our nonprofit and public partners that small businesses cannot find in commercial areas. These are the companies that aren't going to have the typical blue chip balance sheet. They're not going to have the standard collateral features. So they need that additional way to borrow and fund. And that's what our nonprofit partners in our relending programs are focused on. Similarly, the Rural Economic Development Loan and Grant is a very unique program. It's available to electric associations, rural electric associations, and co-ops looking to engage in local economic development. So when we talk about that program, we often talk about the ready, willing, and ability to engage in lending with our electric associations and rural co-ops. They really have to have that capacity, not just to set up a loan committee, but also to service and manage loans, and that willingness to take that role. And luckily, we have partners here in Colorado who have that interest, and they've helped small businesses gain access to capital. It's a distinct program. It has a shorter term on the red leg loans, the REDLG loans. That's the 4th bullet down there, because it can provide a 0% interest loan to that small business, but is for a 10-year term, so much more aggressive repayment term, but you're really talking about a no-cost loan, and even probably almost a money-making loan in this interest climate. But I just want to touch on those two because they're a little more unique and not necessarily the focus of today, but they do demonstrate our relending initiatives where this is the bulk of our direct lending. Again, providing the loans to nonprofit partners, leveraging those relationships to get greater yield into the rural communities. So if we can go to the next slide, please. So this is one of our top tier marquee kind of programs, our guaranteed loans. Our guaranteed loans are basically we providing the backstop to local lenders. We do have multi-state lenders. We do have partners in this program who work across multiple states, work nationally. But our focus, especially here in Colorado, is trying to work with those smaller banks, smaller lenders, in order to backstop their credit decision, make credit available to smaller businesses, help them make a credit determination that might otherwise be tough for them. You know, we realize that in doing guaranteed loans, we're working with those who might have a higher risk. Maybe it's a tougher decision. The business might be slightly more at risk, might be a tougher decision for the bank. And so our key here is to try and help bolster that by providing an 80% guarantee. And that's set in statute annually through our notice in Federal Register. But it has been 80% since the inception of our newest initiative, which is called 1RD. And I do just want to highlight that 1RD guaranteed lending is not limited to just our business programs. As I mentioned, we have community facilities. You can also access capital through a 1RD guaranteed loan for water, wastewater projects, for community facility projects. And then you can also look at these under our business program. Through our business program, we're trying to help them, like I said, make that credit decision, but also expand their lending portfolio. So for a small bank that, you know, might not be willing to take on loans above, say, $5 million or so, the B&I Guaranteed Loan Program, as we refer to this one, allows them to book that at a much smaller rate in their portfolio, in their lending portfolio. With our 80% guarantee, we can do a loan as high as $25 million. We can also do a term up to 40 years, and that's commensurate with the useful life of capital. So that does have a lot of dependency on the lender's underwriting, and that is the focus for this program, is it is a lender's program. We tend to try and not put any additional requirements other than what they might typically require. You know, they're going to want the standard credit report. If there's real property involved or equipment, they're going to want appraisals over $500,000 or $600,000. We'll also want financial statements to prove up historical cash flow, and then we'll want pro forma or projected financial statements to prove the ability to take on additional debt. So in terms of our requirements on the lender, it's likely something they're already doing through their credit analysis, and that's the goal of our 1RD initiative, to streamline this process and actually just come in and assist the lender in making these credit decisions. You know, with every lending or grant program through USDA rural development, there is an environmental policy concern. It's always back there. It's always behind the scenes in some programs. You know, like with our grants, it's a technical assistance grant. We don't have to go into the depth of what would be required, but it's just important to understand if you are doing construction through a guaranteed loan, then you want to engage the agency and the lender as early as possible. That can add some lead time. Beyond that, the fees for receiving this guarantee for the lenders, 3% origination fee, a one-time fee at closing, and then a 0.55% retention or renewal fee. And that's basically to keep that guarantee in place. And that's charged annually at the end of the calendar year based on the outstanding principal. Other than that, we do maintain a list of active lenders in the state, and so you can reach out to us anytime if you're looking for who can qualify. But in most cases, any bank, federally regulated bank or credit union will qualify for this. And if a lender's not sure, they can always contact us or apply to be sure that they are given the approval. It's just not required. That's an important initiative under 1RD, as well as making this program accessible to all lenders already operating in the commercial lending space. So with that, I think I'm ready to move on to the next slide. And that's our value-added producer grant. Now, this has a particular interest to the beginning farmers network and audience here in the presentation. This is one of our few grants that can benefit directly small rural businesses or ag producers. In this case, it is ag producers. And there are requirements for accessing the value-added producer grants. First, you must meet the definition of an ag producer, which is under the eligible applicant bullets. And then you must also own 50% or more of the project commodity, and that's throughout the value-added process. And I'll talk in a minute about what the value-added process might entail, because it's not simple type. There's multiple ways to qualify for this. The grant period is up to 36 months, so up to 3 years to complete your grant activities. We have two main types of grant: the planning grant, which can enable ag producers who is considering moving into a value-added product market to be sure that they're going to be successful. It could fund feasibility studies, business plans. That grant, and like the working capital grant, both have a 50-50 match. So if you're looking to obtain business plans and feasibility studies to prove the concept of your value-added market, then you will have to come in with a dollar-for-dollar match of that. What we often see is applicants who come in and look at a value-added process for their ag production or value-added product and come in for a planning grant in order to get those two key components, business plan and feasibility studies, which are important in accessing capital, even in the private market, whether or not you come back to us. But once they've obtained those, then they can come in for a working capital grant. The feasibility study is required if you're going to look for a working capital grant above $50,000. And a working capital grant is exactly what it says it is. It can pay for processing costs, marketing, advertising costs, inventory, and salary expenses. There are some catches on salary expenses because salaries of owners are capped to a certain limit. So we only reimburse so much of a salary being paid directly to the ag producer ownership. For the labor, the regular working hands of an ag producer, that can be the larger portion is necessary of both the grant dollars or the in-kind match. And this program does allow in-kind match for working capital. So again, that's really focused on helping launch these value-added products. So it's really focused on soft costs, those costs that will scale with the building of the business, whether it be labor, utilities, packaging, marketing. That's where this grant focuses. Equipment cost, infrastructure, real estate for your value-added business are not eligible under this program. I just want to emphasize that. And often that's really in the best interest of both the ag producer and the federal government. Anytime grant funds are used to obtain long-lived assets, then that means a long-term relationship and long-term reporting with the government. So it's really best that it's a shorter grant period focused mainly on helping assist those scalable costs. Now, if you are applying for a small scale working capital with $50,000 or less, you can be eligible for a working capital grant value added. You will have to still provide the information that would be included in a feasibility study. So that's to say you would have to be able to talk about how you're going to expand your market, how you're going to expand your opportunities. But you won't have to have that third-party independent feasibility study. That is required for $50,000 above working capital grants. And that really is the goal of this program: diversify revenue for the ag producer and expand markets for their products. So I'm just going to touch briefly in the next slide, please, about the different types of value-added products. And there's 5 main characteristics sort of summarized here with our icons, so to speak. We have the change in physical state, which the proverbial lemons into lemonades. It's a process that alters the physical characteristics of the product in a value-added method and adds value to the final product. The next is our production that enhances the value of an ag commodity. And that might be organic production, organic foods, possibly free-range chickens. Those are usually the best examples. Then there's the physical segregation. Physical segregation of value-added products would be non-GMO. That's a good example of a type of segregation in ag production, ensuring that the product has no genetically modified materials or composition. The next would be our farm or ranch source of renewable energy. So this is a unique one, but if a dairy farm wanted to use some of their biofuel byproducts there to develop a biogas energy source for the farm, not for sale or distribution or to put back on the grid, then that would be an eligible value-added project as well. And then the other type of value-added project, because we don't want to strictly focus on products, there are projects. Something that you may already be doing, or like I said, with the renewable energy source, is a byproduct of your current ag production activities, and that would be the locally produced agricultural food product. And these are where your agricultural products are marketed to specifically as local sourced, locally provided. You know, a potato grower who's marketing his potatoes strictly on the basis of, you know, they're grown here in the state. And usually the geographic limit is within 400 miles or sometimes within the state where the products are produced. So the next slide, if you don't mind, highlights a couple of our success stories that were promoted in the last year or two. One of them being Colorado Cal, where we helped fund a low temp pasteurization method that helps preserve the A2 protein strains. So ensuring food safety, but yet preserving a lot of the natural benefits of milk versus the high temp ultra pasteurization methods of mainstream dairy. It has a lot of different benefits that have been discussed in both medical and just in general, having benefits for the consumers. The second example was Clark Family Orchards, which they used their value-added grant to fund the soft costs. They funded the construction of this facility near their family peach orchard that had been owned for decades, and diversified their revenue by using their cold fruit to distill brandy. I think they're working on another grant for another type of distilled beverage, but this is a great example of how not only can you diversify your revenue, you can also guard against fluctuations in the agricultural production cycles. So those are the two good examples. That Clark Family Distilling also is a great example of a potential agritourism. They've combined their distilling activities with a small eatery in that location, and this is out in the Palisade area. So now they have people coming in. They've got a lot of open glass display in there, so you can see their distilling operation. So it's really leveraging the benefits of what they've been doing on their family orchards for decades. So I'll move on next to the Rural Energy for America program. This is currently our most active grant, again, that can benefit directly to ag producers and small businesses. The REAP program, as we call it, has two upcoming cycles where we are providing up to 50% of total eligible project costs through a grant. This is significant, represents significant potential savings for ag producers. You know, you can offset those costs of pivots, irrigation pumps, all those types of things. Not only can you offset the energy use through generation, such as solar voltaic, we also do wind, hydro, and other types of renewable energy, but you can also look at efficiency improvements through this grant. So maybe you're going to purchase more efficient pump equipment. This grant can fund that type of initiative. The grant currently, with the 50% total eligible project cost, is running through two more application deadlines, June 30th, as well as 9/30th. And so it's been very popular. We're getting a lot of interest in applications. Certainly feel free to reach out to us directly if you have any interest in applying for the program. Under the generation systems, the minimum grant requirement is request is $2,500, so total eligible project cost, I think the math is off there. It should be $5,000. And then the maximum under the generation system is $1 million, so it can fund up to $2 million in total project costs. I think this was done back when we originally scaled it up to about 40%. But under the Inflation Reduction Act initiative by the Biden administration, we have this funding through the next 2 quarters. We anticipate maintaining a 50% project cost going forward, but we'll have to wait to see how the rest of the year plays out and how this looks in the next administration. Historically, we've only been 25% of total project costs. So if you're entertaining a renewable energy system or renewable energy improvements, now is the time to look at it. And then you see the minimums for the efficiency, $1,500 or up to $3,000 for efficiency improvement minimum grant. So that can fund windows, doors, HVAC equipment, all those type of efficiencies for either an ag producer or small rural business. And that maximum grant amount is $500,000, which will cover up to $1 million in total eligible project costs. So ready for the next slide, please. Eligible use of funds, as I kind of covered already under these 2 programs: energy efficiency, lighting, heating, cooling, windows, doors, energy efficient agricultural equipment, production equipment. This can be irrigation pumps. It can be watering pumps for livestock, automated controls, insulation. Renewable energy, as I mentioned, we always hit the main ones: energy, solar, wind, and small hydroelectric. We also, as I mentioned in the value added, we do anaerobic digesters and biomass fuels as well as, and in addition to geothermal. Ag producers must qualify by having 50% or more of their income come from ag production. Small businesses will qualify by meeting the SBA definition, which means you'll need your NAICS code, the NAICS code. You could check that on SBA's website and check the requirements. Usually going to come down between a total amount of revenue or a total number headcount for the company. And as long as you meet those definitions, you would be eligible under this grant. So I'm ready for the next slide, please. And this is just recapping those upcoming deadlines. Want to stress again, if you have any interest in these, particularly in the Rural Energy for America program or REAP program, please reach out to our team. I'll have contact information here in just a minute. We do try and complete our grant process in about 60 days currently. We are a little backlogged. The popularity of this program has really put a demand on our team here in Colorado. We went under the Farm Bill, historically provided us 2 application cycles at that 25% amount of total project cost, which had us processing about every 6 months. When the Inflation Reduction Act came out in December of 22, started off 2023 was the first quarter, we increased to 4 cycles, so quarterly cycles, and twice as much funds available. So it's definitely a little bit of a pinch in our pipeline, but thankfully with some additional resources, et cetera, we are now catching up. So again, feel free to reach out to us with questions. And before I give the contact information, I will highlight a couple successful projects on the next slide, please. And this project was in La Plata County. This building was able to offset 100% of historical energy use, so complete offset, over almost $7,800 in annual savings. And you might almost miss the solar if you first glance at this. This is a real creative use of it. It's one we promote quite often. They've used the awnings for the solar, so it's one in the same. They provided both the shade and the structure for the facility, as well as the solar generation. And next slide, please. This is a great one because this is an example of a small hydroelectric, which is not necessarily a common use under our program, but is certainly eligible. And this revolves around irrigation ditches that exist throughout Weld County. And this ag producer was able to harness the power of that small hydro, the water flowing through the ditch on the property to create a generator that offset, $6,000 annually, 100% offset of his ag production activity, generating 43,000 kilowatts during the season. So that's another great example of the use of our Rural Energy for America program. So with that, I'll go to the next slide and kind of focus on our contacts here in the state. We have 7 area offices technically. With our state office, I guess it's 6 area offices. So we have the Denver state office here, of course, located in Lakewood, Colorado, west side of Denver, at the Federal Center. We have an office in Alamosa, Colorado, Cortez, Colorado, Craig, Colorado, Delta, Los Animas, and Ray. So you can see we're distributed currently. We kind of have all the corners covered and a bit of overlap in the midsection of the state, but plenty of area contacts for anyone located out not in the Denver metro area. But you can reach out to any of our team, any of the contact phone numbers there in our office, and I'm sure we're going to be providing this presentation to the attendees today. But I will open it up on the next slide with for any questions. And so I see in the chat there was a question: are battery storage units included? So that's a great question. We're getting this a lot more. So battery storage units can be considered under our Rural Energy for America program. We have to look at those in context of a full system. Generally, our requirements are the battery storage is going to provide sufficient storage for use on the site. Most of our energy generation systems score best when you are not overproducing your energy use. The idea is trying to tailor the energy generation system to produce as much as you need with some, buffer, some additional. And that's where the battery really fits in. Where we've had batteries looked at twice or not turn out eligible is if they're looking for large storage that would, say, enable the energy generation system to put energy back on the grid when there's peak hours. So when it really becomes part of an energy generation for sale, that's really either not going to score or it's going to have an eligibility issue. But in general, battery storage units can be considered. Next question I see is, where can you find requirements to qualify as a small rural business? So again, SBA site is going to be the best place to look. Thanks. Bill, I didn't know you were on. Thank you very much for backstopping me there. That's the link for the SBA definition. And again, it's going to come down to Katie, whether or not it's total revenue or head count, some combination of that. We go off of SBA's information. I don't know if there's any other questions there, or if anyone else wants to either raise their hand or come off mute and ask a question. We're available to discuss.
There was another question earlier in the chat that Bill already answered, but if you wanted to expand on it, the question was, will this apply to expenses made retroactively? Bill said it wouldn't apply to past products. I didn't know if you wanted to expand on that at all.
Sure. Thanks, Elizabeth. Was that regarding value added, or was that renewable energy, rural electric? I don't know if I can scroll the chat back up to see it.
Yeah, it was REAP, Robert.
It was REAP. Thanks, Bill. No, then that's spot on. Typically, when you submit an application, thanks, Bill, when you submit an application for REAP, we're going to evaluate it for completeness and eligibility. Once your eligibility has been determined, we're going to issue a notice that notifies you that you are eligible. It's at that point expenses incurred could be considered part of the total eligible project cost. Any expense incurred prior to the eligibility notice from the agency, which includes prior to application, would not be eligible. I see there's another one from Martha here. Are there specific solar firms associated with the program? No, there are not. We make no endorsement of any solar installers. We do definitely realize solar installers are promoting our program in some of the early days of the Inflation Reduction Act increase, which is early 2023. We definitely leverage some of that networking to help us amplify the program availability, the funds availability. We had this is historic increase. So We do work with installers. We do host webinars, office hours, if you will, with installers to answer questions, look at applications, but we do not make any endorsement of any specific installers or partner with them specifically. And then how is engineering design obtained if not? So engineering design would require most cases that you're going to work with an installer. Otherwise, small scale solar, you know, there might be the opportunity to try and work with, say, a Colorado Clean Energy, Colorado Department of Agriculture, and I would be remiss if I don't mention that we do have technical assistance partners. I don't think we had a slide on that. They may be able to assist you with the engineering design of the project. So Colorado Department of Agriculture and Tri-State Electric are both our technical assistance partners. They've received grants from rural development to help us outreach the programs, but also to help provide services necessary to access the funds and apply for the grant. That includes just registering for SAM, for System for Award Management. Every applicant needs that if you're trying to receive grants from the federal government. That also includes filling out forms, how to submit the application, how to complete any environmental screening. They're providing assistance across that. They are focused on the smaller grant applicants, 20,000 or less, but they're available to answer questions across the board and may be able to assist with those engineering design needs. Otherwise, if you are trying to do it in-house, then you probably do want to reach out to us or do it, you know, DIY. You want to reach out to us and talk about eligible costs because that could impact the total eligible project costs. Are there grant application service companies available? So that's really our technical assistance grants. We do see that some installers also have grant writers on staff. They will assist, but again, we make no endorsement of them. We cannot show preference to any particular installer or grant writer, other than we can direct to our technical assistance partners, and they will be listed on our website as well. So, and it looks like Bill caught the next question, which are there grant application service companies? And as Bill mentioned, there's grant writers and REAP, but there are also technical assistants. For value added, similar situation. There are grant writers available. We make no endorsement of them, but we're not also unaware of the complex nature of the federal grant application process. So a grant writer can definitely add value to your effort. They can certainly flatten the learning curve, help you understand the grant process, help you prepare and write grants, but they are not required. And so therefore we have no specific partnerships or endorsement of grant writers, but all great questions. And you're welcome, Martha. But if anyone else has any additional questions, feel free to ask, drop it into the chat. And I'm not sure if we had our contact information in here after all. So Bill, I might ask you, if you don't mind, maybe at least drop your and my email in there in the chat, or I can do it myself, I think, actually. And feel free to reach out. Thanks, Bill. To us directly with questions on any of these grant programs. Like I said, we just hit sort of the tip of the iceberg today with 20 plus programs and a lot of sort of one-off initiatives. We've seen a lot of that over the last couple of years. We had grant programs directed at the meat processing portion of the food supply chain, both intermediary relending programs as well as direct grants to businesses, which again is kind of an exception for us. A lot of our direct grants they're limited to our rural energy and our value added. A lot of our other grants go through intermediaries to, again, get a greater yield and leverage our networks with our nonprofit and public partners. But with 20 plus programs, this is just a sample of what we can do. Often the best idea is to put together a short list of your, as they say, shovel-ready projects, those that you might be seeking funding on, and reach out to us. We'll be happy to talk about financing and funding opportunities. I do see another question from Larry in regards to value-added producer grant. Where would you find grant funding for equipment? That's a good question, Larry. I might suggest reaching out to Colorado Department of Ag. I don't know if there's other direct grants through any of our other federal partners or even our USDA partners, Farm Services Agency, and others like that, but there's always new initiatives. I'd certainly recommend connecting with your local ag commission and trying to find additional funding resources. You can also check at the state level. The Office of Economic Development and International Trade is not a bad resource, OEDIT, in the state of Colorado. But Colorado Department of Agriculture also works closely with OEDIT, so they, any of those partners would be a great place to look.
Perfect. Thanks, Robert. I really appreciate it. There's another question there for you.
One more. How did the 50% match impact the 30% tax break for renewables? Oh, great question. So we really do not look at tax breaks. That's a great question, because I think what Martha might be sort of leading us into there is, and maybe not, Martha, you can correct me if I'm wrong, but a lot of federal grants will have some limits on other federal sources of funds, and our REAP grants are one of them. Your federal source of funds must be limited to the grant itself. Now, that doesn't mean you can't have a state level grant that would also help you on your renewable energy project, and tax credits do not affect your eligibility, do not affect the total project costs. You'll want to speak to an accountant or a tax expert for the full details on that, but tax credits are not considered in the total eligible project cost or in the match. So we would not take, to my understanding, that tax credit as a match. So you will have to show in your application that you have the ability to fully fund the project, including the match. Because all federal grants are reimbursements, this project will have to be either funded or financed, and there are short-term financing partners. Some work with our technical assistance partners. Colorado Clean Energy also has some options there in that space. Tri-State is working to look at low-interest financing for renewable energy projects, but you will have to have the ability to fund that, and including your 50% match. The tax credit would not show as qualifying for that match component. It may offset your match that you're putting up, but you'll have to have those funds or show proof of the funds at application or award. And then Martha's got it. I think that's follow. Inflation Reduction Act provides 30% tax rate on specific sustainable projects. Understanding correctly, the 50% by the farmer is still eligible for a tax break. And again, I'd have to defer to a tax expert there, Martha. I couldn't tell you for sure. That's not our area. In fact, we don't even engage necessarily in business consulting. We think of ourselves more as a lender. We're a federal sort of finance source. So I'd have to stop short of advising there, but just know that 100% eligible project costs begin after you're determined eligible. That would be all the costs associated with the renewable energy installation, equipment, etc. We look at the total project cost, determine the eligible portion, and then your grant would be applied to 50% of that total eligible amount. The tax benefit from the remaining or match portion, I'd leave to an accountant. Sorry. You're welcome.
Perfect. I'm not seeing any more questions, but keep them coming. We have plenty of time. So if you think of any more, feel free to put them in the chat or raise your hand. We have a couple more slides, but it's more of just deadlines and upcoming webinars. So FSA has a couple deadlines. We do have a grassland CRP sign up that hasn't been announced yet, but it should be announced soon. We anticipate it to come May or June, so coming up soon. And then we also have our spring crop reporting deadline, which is also the same as RMA's spring crop reporting deadline. So if you have any of those crops you need to report, make sure to get into your FSA and RMA offices. NRCS does have a deadline on July 2nd. Cindy, do you want to talk any more about that one?
Sure. It's our RCPP project initiatives, and that's really for partners to team up with us to do certain projects throughout the state. Last year we funded one with forestry in the Front Range of Colorado with the conservation districts to do forestry projects. It could be irrigation water management entities, anything like that. Also with NRCS, we are just finishing up funding for 2024, but we will be taking applications for EQIP and CSP as they come in. So don't forget about that. Just go into your office, visit with them. And at any time that you want to update your conservation plan, we are more than happy to do that. Hey, Liz, where are we at on CRP?
Yeah, so general CRP has closed. I know they've done their accepted rejected, or they're still working on their accepted rejected list. We're not sure when grassland CRP will be open yet. It hasn't been announced, but they do anticipate it coming soon. And then continuous CRP, that's pretty much open all the time. People can go into their office and request a continuous CRP sign up. Perfect. And then for RD, there's our two deadlines there for the REAP program. And they also have a REAP office hours that we put in here. I don't know if you guys want to talk any more about your office hours. I think you kind of mentioned them as well.
Thanks, Liz. We do have office hours coming up. We might announce some additional future sessions. This is where applicants or installers can come online with us. It'll be an open Teams invite. If you're not aware of it, or if you hadn't received an email about it, feel free to reach out to Bill or myself through our emails, and we'll be sure you get a copy of the invitation. And then we can get into further depth on specific projects. Our office hours are really open form. Ask questions, talk about your application, talk about requirements, funding, etc.
Perfect. Thanks, Robert. So that's all we have for the upcoming program deadlines. We do have our future webinar dates and topics listed. The next one is going to be with RMA and working with them how to get crop and livestock insurance. And then we're going to have some technical and financial assistance to producers, landowners, etc. through NRCS, and also addressing any of your natural resource concerns. Coming up in August, we'll go over soil health and how to use our web soil survey. In September 18th, we're going to go over some urban ag and the initiatives and what we're doing specifically in Colorado to help our urban producers. In October, we're going to go over what CSU has to offer. We're actually going to have someone come present from CSU and provide what they can also help with producers. And then in November 18th, we're going to have another partner, the Colorado Department of Ag, is also going to jump on and help us with new farmer and rancher resources. Like I mentioned at the very beginning, if you've missed any previous webinars or if you want to go back and look at previous topics, you can head to our Colorado FSA website, or you can actually watch just the recordings on the NRCS YouTube channel. This is just some general contacts for myself, Cindy, Amy, and Jeff. And then Bill and Robert's emails were also thrown in the chat. If you have any questions or concerns, feel free to reach out to any of us on those aspects. And that is all we have for today. If anyone has any further questions, again, feel free to put them in the chat or raise your hand. But that is all we have for you all today. Thanks so much and have a good afternoon.